Welcome everyone, Simon here from the Wales of Wall Street. It's so good to be back. The voice is back. I don't feel unwell anymore. Absolutely brilliant. Guys, let's go straight into this one, an XDC video in front of us today. Before we do that, do check out the other videos on the channel. Loads of different topics and discussions, and also check out the community section every now and then. We just recently put a voting up for the next sort of topic that we either want to add to the portfolio, or certainly something that you guys might want to have a video done on as well. So I think CPH was up there and a couple of others that are doing really well with the voting, so do check that out, let us know, and we'll for sure be doing the research over the next couple of days. To be honest, I do like all the suggestions as well in the custom options too, but yeah, do check out the other videos as well, and don't forget of course to smash that subscribe button if you haven't done so already. Welcome to the channel if you are new, and welcome back to those that have been with us for time and time again. Absolutely brilliant, coming towards that 10,000 mark. Sorry for the lack of videos last few weeks for those that didn't know. Yeah, just had some weird virus going on, but it seems to have cleared itself now, so up and atom, as they say. So guys, let's go straight into this topic. I'm going to start this really with some of the recent news in the last few days around the aspect of the Marco Polo situation. Now, the reason I'm bringing this to a bit more attention is, of course, this is heavily related to the trade finance markets, right? So something that we talk about here on the channel quite a lot is the trade mechanism within blockchain, or the integration of blockchain within trade finance. We're talking about multi trillions of dollars worth of money going in and out of the trade systems daily, and this can be things like supply mechanisms, logistics aspects, trade finance in general. There's so many multitude of different areas to comply this topic with, and do check out the previous videos. I'll try and leave them at the end of this one, where we cover that in very high detail. But one thing that stood out for me in particular with this, we do remember this. So this is the Trade Finance Global website, by the way. Sorry, I forgot to introduce that, TFG. So there's a lot of projects sort of heavily involved with this, trying to bring in the proof of concepts, the proof of integration of how this can really work, and really define frameworks that can take over the existing systems that we have for trade finance. And 9 or 10 months ago, we had the WeTrade project going downhill. I think it was a HSBC backed one, if I remember correctly, but Marco Polo stands out for me more recently. So first of all, these debts, this debt news, 5.2 million euros worth of debt. It looks like they're going insolvent and potentially just disappearing off the face of the earth, which is a bit of a shame. Of course, the team has always been very strong, but we'll go into this in a bit more detail in a second, because Andre Carstman dips his toes into this conversation as well. He's of course heavily involved with the likes of XinFin, and particularly with like Trade Tech, for example, of course, working with each other. We'll go into that in a second as well. But taking a bit of advantage in some ways of this kind of negativity to bring some positivity to it. But again, bring about that topic that we're so early, guys. We're so early in this whole development of blockchain, and definitely the integration as we transfer traditional systems, as I said earlier, to these Web3 blockchain platforms. So there's plenty more to come, of many losses out there of many different projects, and arguably could have been strong projects over the years, just clearly not defining maybe their strategy correctly. And Andre does pick up that in a second, but for me, Marco Polo Network stands out as well, because it was built within the Corda system, the R3 Corda system, of course, heavily partnered in some aspects, certainly from the node infrastructure perspective with XinFin. And I don't put the two and two together. I'm not like concerned with XDC or any of the other projects that are landing on Corda or within XinFin, etc. I just think it's just important to know that what's going on in the industries themselves, but also what's going on within trade finance also. Like, what are the positive things we can take out of this? What are the heavy hitter projects? And what are the ones that really define themselves as true integrators and true performers of the future, both in terms of our returns on investment as retail investors in the token aspects, but more importantly for me, in all honesty, is the utility of these, like what actually stands out for that. So We'll go into a few of the trade tech challenges in a second. This is a really interesting article here, to be honest, about this whole thing. But I'm just going to pick up this point here from Andre Kasterman. So just to reiterate, advisory and fintech board member of the International Trade and Forfeiting Association, IFTA. We covered that many times in the past, and the TFG as well, which we're talking about right now from this article. Collaborative innovations in trade finance are the most complex to get off the ground. The only way to succeed is to focus on specific functions or processes and embed those into the trade and trade finance ecosystem. So very much looping around to the point we just made earlier, about, you need to be very heavily focused on one specific strategy for this. The whole trade system, the trade finance infrastructure right now is very complex, and you can't just go all guns blazing or have a multitude of different solutions. You really have to define a certain area, and that's why I really like XinFin in some instances. Yes, it's got that boasting capability of having essentially a hyperledger of a public domain, but also a private domain. But it really does work well with integrating with other partners like TradeTech, for example, to create that Trada token that we covered. When did that come out? That's probably nearly a year ago, I would have thought. But the Trada token was very much the emphasis of utility that was going to be utilized within the trade finance platforms, whereas a lot of these other projects, like Marco Polo, for example, were just trying to obliterate these systems with so many different things and not really focusing on one key avenue, the real money maker, right? So it's very interesting indeed to see Andre coming into focus on this particular topic, mentioning as well the Marco Polo situation, not the first and will not be the last one. And I totally agree with that. I think we've seen over the last few years the demise of many different projects. Some we always thought that were maybe considered as strong. Some have been rug pulls, some have just disappeared or just not, organize themselves in a way strategically to develop in the long term. And it's reiterating that point that this whole, albeit blockchain, since the days of blockchain started with Bitcoin, 15 to 17 years ago now, which is crazy to say that number out loud. It's so long ago, really, but it's still so early in the mechanism of finance in general for the whole industry. And we must reiterate to ourselves that we can do all the research we want, we can get involved as little as much as we can or want to with some of these different assets, but we must understand the industries that each of these tokens or each of these projects are within. So as time goes by, more will diminish, and you will have the strong developed ones and the strong backed ones with great teams, with great philosophy of what they're trying to achieve, standing their ground and really winning this race. And it's no different in any of the other blockchain sectors. I'm talking about like AI in general, supply chain, token related projects, smart contracts, blockchain in general, from that top level, layer 1, layer 0, all the way through. We can't have all of these, say 10, 15, 20 years down the line. I would argue maybe even the next few years, we may even lose more than 50% of all the crypto assets that even exist. So it's a real race across all these industries. But as Andre mentions here as well, this has been my approach when I set up the DNI initiative and the TFD initiative, respectively with Enigio and TradeTech. We focus on adding new differentiating value. We avoid changing practices, systems, and channels. Rather, we add new highly specialized trade tech components for the market to take advantage of. At this stage, the recipe works very well and many stakeholders are benefiting. So it's basically suggesting, or he is suggesting, that actually the greatest strategy is to evolve existing systems, not necessarily always fully replacing them. You could never fully replace something. You're building these foundations that we've had for decades upon decades, and you're adding the infrastructure, the ability of Web3, the ability of physical NFTs or NFTs in general, and especially that relation to trade-based tokenization. This is what it's about, guys, is really understanding these mechanisms and understanding the industries that these guys are working towards. So very interesting indeed to see that kind of information here. Why are blockchain trade techs facing so many challenges? Lack of adoption. This is a very simple point. Is again back to that point about being being early in the whole aspect of everything. But this is going to be something, because we're in an economic downturn at the moment. There's going to be a lot of companies out there that were perhaps very interested a few years ago. There's going to be some great enthusiasts company-wise towards this, commercial commodities working towards this to keep it going. But in general, a lot of companies out there will put the brakes on a bit to taking this adoption further. So when we come out of this, guys, it's going to be in a massively strong position. Regulatory uncertainty, this is a very obvious one. We talk about this all the time. I think it's very clear. I mean, you've mentioned FTX collapse. I mean, that's just one piece of the puzzle, isn't it? There's so many things going on worldwide, through governments, through legislation, through parliaments, about how can crypto, how can tokenization, NFTs, etc. be fully regulated, and who regulates these? Who's the consortium behind these? Limited scalability. Well, this is something that's going to develop over the next few years. We're now seeing like layer 2, even layer 3 and beyond, from in terms of scalability, allowing further network capacity, allowing further bandwidth for user abilities there as well. I don't really have any qualms with that, but this is talking about, why is it facing so many challenges? This is right now. It'd be really interesting to see this article in like maybe 3 or 4 years time and look back at this to see are these still issues? Who knows? High costs. So again, this is very much around the instance of like any new technology, any new infrastructure is always costly to begin with, and then when you get that flow and the full integrations over time, it does diminish with cost. And there's a lot of projects out there that boast things like feeless transactions and things like that, and we know like some of those, like IOTA for example, boast that with the new sort of Tangle protocols, the DAG protocols, but for instance, with a lot of some of this stuff, in addition, the cost of running a blockchain network can be high. Now, this possibly relating to the likes of maybe Ethereum, for example. A lot of EVM-based projects, albeit XinFin is arguably one of those with the XDC token. Still, most projects work on the Ethereum network. You do have to understand that until we get further scalability, these bigger chains that have been around a long time just won't hack it just yet to become, I guess the word be viable for companies to fully use it. So we have to really work hard on that. And the lack of interoperability. Now, I have a bit of a question mark on that. I mean, there's a lot of projects out there that are really heavily working on interoperability factors, and that could be in a mixture of things. That could be interoperability in terms of infrastructures talking to other infrastructures, or in particular trade finance. Can you imagine how many systems, how many different sectors and everything work in the trade finance ecosystem right now? So you talk about that from an interoperability perspective and those talking to each other. There's also potentially chain on chain interoperability too. So the likes of Quant could come into this conversation quite heavily. Obviously, again, another heavy partner through XinFin, Corda, etc. Quant and many other projects are working heavily on that interoperability factor, the ability for chains to talk to other chains. I do think that we're never going to have like one full chain. I think it's going to be a mixture of various different ones working at different capacities, working at different network speeds, working with variations of different projects. They all do need to talk to each other. It's no different to like Wi-Fi routers, for example, at home. It has to talk to all your different devices. How does it do that? How does it simultaneously know which one it needs to send more bandwidth to over the other? It's all part of the building process, and especially with AI and everything coming, that's going to be something that simplifies and gets better over time and more efficient over time. So I'm not too fussed about that. Slightly not necessarily off topic, I thought this was actually really interesting. I'm just going to zoom in actually. So this pulls out a lot of the projects that are relating to the Trade Finance Global website here. Okay, so under that kind of umbrella factor of consortium power. And this HLF one is very interesting to me. It's always been interesting to me. IBM's Hyperledger Fabric. Honestly, if you don't know what Hyperledger Fabric is, go and look it up after this video. It's absolutely phenomenal. It's very off the radar. I don't believe you can invest in it, but they are doing some really serious stuff. And it's quite incredible to go through that IBM blockchain articles and everything like that. It's really, really fascinating. But I didn't realize that there was so many I know it's not a massive amount, but there are more than I thought there were of projects, particularly in trade finance, related to under that IBM umbrella of their Hyperledger Fabric. Very interesting indeed. Of course, Quorum mentioned here, proprietary technology. R3 Corda, which was mentioned, has got a lot of projects that are related to trade finance, as well as many others, of course. You've got Ethereum on there, and loads of ones that unfortunately we don't have names for, but you could clearly just look at each of these individually and figure out what chains there are if you wanted to. But yeah, I just thought this was a nice little table because it does also show whether they're established or live and running, or if they're in piloting phases and stuff like this. Proof of concept phase is quite interesting to me. Marco Polo itself was arguably between these sort of two levels by the looks of things, entering into production / early stages and live and running / gaining momentum. So it's a shame, really, because it looked like it was on track to do some interesting things. But back to the point of, these are so many projects and technologies that are really focusing heavily on the trade finance sector in particular. Now, what is also interesting is that trade tech isn't mentioned on here, but yet because of Andre Kosterman sticking his nose into this conversation, it does make it a very sort of on topic, if you like, of how interesting it will be over the next few years to see the development of that Trada token and specifically the rest of the ecosystem on XDC XinFin. So for me, that's just a few little topics that I thought were good to run through, to be honest. I hold XDC for a number of reasons, and certainly one of those is the trade finance areas, as well as all the other things that it's doing in the other sectors of like the private and public domains too. So we must keep an eye on all of this kind of stuff, guys, because this is what develops our research, this is what develops our choices, and the reasoning behind, really. Of course, yes, we want to try and make some money in the markets, but for me, I think it's very, very important to understand what goes on in the rest of the markets that these projects work in. So hopefully that's been a bit of an interesting topic to run through. One last quick point before we go into the chart. XDC recently did a bit of a revamp. This is the xdc.org, by the way. This is part of the foundation element. So you got XinFin and you got XDC, the token, of which they're now the XDC Foundation. So they've done a bit of a revamp on the website. It kind of half freaks me out, to be honest. There's some weird things going on in this picture. I'm not quite sure what it's about. I would very much like to know how they got to this, but whatever, it's half inch. If you think you know what this is about, please do let me know. I can see some weird laptops here and strange animals, and is this Alice in Wonderland? I'm not quite sure, but it's holding the phone to the sun for energy, maybe. I'm not sure. There's a POS system here. I don't know. I don't know what's going on, but if anyone knows, just let me know. But yeah, here's my point really around this aspect, that this tokenization of real world assets and financial instruments, this does massively apply to the tokenization of trade finance, as well as many other things too. So trade finance here, XDC Network sets a benchmark for digitalizing trade finance by enabling the tokenization of diverse trade finance instruments and assets. There's a huge big section on here. I think we've covered this many times in the past, but do check this out if you get some time and you haven't seen it before, because it's absolutely fantastic. Look at this, $1.7 trillion worth, the gap in trade finance right now. And this is one of the big things that XDC XinFin, along with its partners in the ecosystem, are trying really hard to achieve, becoming a solution for this magnitude of gap. And over the years go by, as I say, I think we're going to see some massive developments of XDC and this sector as well. So that out of the way, guys, let's jump into the chart. I hope you found that relatively interesting. The XDC price point, 2.6 cents at this current moment in time as a recording. We've had a bit of a bumpy ride over the last few weeks. I think the last video we did was about a month ago, which is crazy to say that really, because it doesn't seem that long ago, but here we go. So we've gone up literally kind of roughly around from this 4th of January point, 2.4 cents, all the way up here to 3. And now we're edging our way back down to this previous point that we saw in January. There's a couple of points that I want to make here. We mentioned this in a few videos back of XDC. There's this huge gap here. This has taken us back to February 2021, by the way. Before we saw the massive uptake of XDC all the way up to the price points here of around 20 cents. So it gives you a bit of a momentous mindset here that there's loads of room to grow, loads of growth room here for great returns in the future. But for me, as I'm looking at the downward trend of XDC, as I am seeing across the market at the moment, I think a lot of people were trying to get fooled that we're now into a bull cycle. You've got to understand the way these charts flow, but also importantly, how the markets flow over time. And for me, this was a really critical area to take note of. Okay, so they've got these lower points here, which I marked in that previous video at 1 cent. Now, I'm not saying we're coming back to 1 cent. It's definitely possible. But what intrigued me the most was this relative volatile period here where we were messing about with this 1 cent marker. Okay, so we had a lot of up and down movement before then, before we got to this point. But in that short space of time, we absolutely shot up so quickly, similar to what we saw as well here in March 2021, and took us all the way up to those high levels in April, the short space of a month. And there's loads of different things going on at that time that would basically help to push that up. But what we're seeing, if we look at these lower regions here, is around this 2.5, 2.3 cent mark, which is exactly where we are again right now. And it's the reason I pointed that out was these areas of interest that we could potentially grab some XDC on those lower points. Now, we saw a bit of an uptake here, as I mentioned earlier. 11th December took us all the way up to that 3 cent mark, and now we're slowly bobbling our way down to see if we can get this support level secured at 2.6. Now, in my opinion, based on that previous data back here and the trigger points that we saw here on the 29th of June 2022 and these lower regions here on the 2nd and 3rd of December respectively, I don't think we're fully capable to say that we have hit definitive support areas and support lines. And I think that will be very defined in the next week or two, because we're now matching this August-September area last year. And what happened with that is, yes, we took the upward trend, but it just couldn't hold it. It could not hold that. It couldn't even break that barrier of 3.3 cents, and it absolutely shot itself down over the next few months. Now, I'm not saying we could have a full repeat of that, but I do have my buy orders still back down here at these lower 1 cent regions. Call me mad. But I do also have buy orders back down here at the lower regions of 2 cents, and I will for sure be having one again around these kind of areas at 2 cents as well. Taking me back to this point here, if we look at the history of the chart back, I know it's like literally nearly 2 years ago, which is mental, but they don't lie. The data doesn't lie, and neither do the orders, based on algorithm, based on how traders use this daily or weekly. It serves its purpose significantly. So they're my buy order areas, okay? And that is very heavily also related to the fib levels that we see here. They're good markers, of course. But I think that if we look at the world in general, we're not out of a recession. I think there's possibly still more crazy things to come. There's a lot of still crazy macro events. Even here in the UK, guys, they're like pretty much restricting us with tomatoes and cucumbers. It's absolutely ludicrous. Blaming the fact that there's some bad weather in Spain or something, yet most of them all grown in greenhouses anyway, so I can't quite understand how that works. But guys, just go and get some seeds from down the road and grow your own tomatoes. It's a lot easier, trust me. I've been growing them for a number of years now. But my point being is the world is crazy, guys, and we're not out of it. I still think we're in the middle of it, maybe even still at the beginning of it, who knows. And I think all these defining factors over time, especially things like interest rate hikes that we'll see in a couple of months' time, some strange developments recently with the UK here in particular, with HMRC reducing the amount of tax allowance for capital gains. So you're going to see a lot of investors maybe pulling the money out in April time to take advantage of that extra £6,000 that they can get tax free. Who knows? But I think it's just in my head. It's in my head that in these next couple of months it's going to be a bit weird, and I think that's what's going to potentially bring us down to these possible lower regions on the longer scales. And to kind of think about that a bit more logically, if we look at these RSIs down here, so currently at the moment the RSI on 90 days is 47. It has been reducing down very slowly, and I could honestly think that over a 3-month period, which is a good really foundation of data to look at, that might come down to that 45 region, or maybe even lower than that, towards 40. And that's where I do think we'll see those kind of areas of maybe the 2.4 cents or even lower. But of course as well, the 14-day would argue right now that this is a relatively good DCA opportunity at these current prices. I always buy XDC at various prices anyway. I'm not majorly fussed between 2 cents and 3 cents, but I do like to try and accumulate as much as possible. I'd love to get to 1 million XDC very soon. That would be fantastic, and I think these lower regions do allow that. So whether it's 1 cent or 3 cents, I think in the magnitude of things, in the long-term aspect of things, it's so low. And what XDC is capable of is very exciting. It's going to have a huge longevity. It's going to have a huge future in general. And that's where I see beyond the mist, as it were, to say that this is an incredible opportunity for return on investment, in my opinion. It's not financial advice. It's just exactly what I feel inside, and exactly one of the reasons why I'm grabbing this token at these low points, whatever it might be. But for those out there that do like those even lower regions, and yeah, of course, I'm not going to lie, I'd love to buy more at 1 cent or 2 cent than I would at 3 cent, for sure, if you think about accumulation level opportunities. But my point being is that there is this defining factor that at these current areas, these big lower areas, is great opportunity to see a big full swing whenever that bull cycle is in the future to take advantage of. But again, on the RSI on the 28 days showing at 46, this is again pinpointing to me that actually this is a nice little DCA area. I would like to see that come down to the 40 mark, and that's where I do think we could see that 2 cent mark again tested. But as I said, it's going to probably have a bit of a sideways movement over the next week or two, maybe even again retesting that 2.8 cents once more. But I've just got this feeling and this thought process logically based on historic data of the XDC chart, but also what's going on right now. You can see even now how it's slowing down, and that's not to say there's no confidence or anything like that. It's just the way the markets are going. I just feel like it's slowing down slightly to the point where it will maybe potentially struggle to hold this 2.6 mark, and that's where we might see it come down to that 2.3. Let's see how that goes. We'll leave those markers in there. We'll review this in a couple of weeks' time anyway. I'm sure I'll do an XDC video before then, actually. But performance-wise on the right-hand side, 3% down on the week. We've got 3 months showing green just about. The others are turning red again, which is a bit disappointing because we did see some really good greens across the board with that one, but it just shows you, I wouldn't call it a fake out, but I knew that these upward trends of the market wouldn't last too long, and I think these next couple of months are going to be really defining to see whether we stabilize the whole entire market or if we're coming down. I can't see a bull cycle for a long time, guys. That's my honest opinion. I'd love to be proven wrong, of course, but let us know what you think about that in the comments below. The whole thing, really. And are you guys holding XDC? Are you a long-term holder, short-term holder? Are you taking advantage of these daily trades, weekly trades? I'm really intrigued to know. But for me, I'm a long-term holder. I'm not selling my XDC for a long time. Whether we get to $1 or not is another question. But certainly, I do think like in these next big bull runs, we should be at least aiming towards that sort of 50 cent mark as a minimum. And I think it all really depends on the further integration of trade tech. Trade finance in general. We've seen the topic of how much revenue opportunity is available in that sector, but I think it's going to be a massive ecosystem development over the next few years, and that's why I'm excited about XDC, or one of the reasons anyway. Guys, I think I've waffled on long enough. Got a few more videos to do for the rest of this week. Thanks for watching. Thanks for listening. We'll see you in the next XDC video. Take care. Bye bye.